So we have a Canadian federal election coming up on April 28th. How should investors view that and the promises by the politicians? Let's get more from Erica Lau, CEO and lead portfolio manager at North Growth Management. Erica, thanks very much indeed for coming on the show.
Thank you, Andrew.
I mean, the federal election, it's always a hard one for investors to assess, but what are the main themes you're watching in this election race?
Well, for Canadians, this is a big catalyst, the upcoming federal election, and an elected majority government would give much greater clarity to policy going forward. And we as a nation can move forward with trade negotiations with the US and other countries and partners. So we do see it as bringing more clarity.
That's interesting. You think one desirable outcome could be a majority government that wouldn't need, say, NDP support to stay in office?
A majority government would definitely give more clarity in that you'd have more stability.
Are you disappointed at all that there hasn't been that much talk of cutting the deficit? There's been a lot of talk of tax cuts, but it's not clear to me how if anybody's that interested in focusing on the deficit right now.
No, that does not seem to be the topic of the day. What we have been hearing from a lot of companies is the tariffs, and there has been a lot of policy uncertainty. And for that reason, companies are in a wait-and-see mode.
It's interesting, isn't it? The tariffs, so far it appears Mark Carney has done a better job of portraying himself as a stout fighter on the tariffs. Do you think, I mean, is that unfair to Pierre Poilievre? I mean, it's clear he'll stand up for Canada as well.
I think what Canadians really need is an elected majority government so that there is a mandate and we can move forward with the trade negotiations.
How are you thinking about the tariffs tomorrow? I know it's an unknown factor at this moment, but have you made any changes to your portfolio over the past few weeks?
At North Growth, we really focus on the long term, and we are a manager that manages from the bottom up. So we focus on the fundamental characteristics of individual companies. So from a long-term perspective, these tariffs are a lot of noise. It is important to have clarity. And so far we have had a lot of announcements and very few details, which is the reason why there is a lot of pause in company activity. But in the long term, we do think that this is noise. And if we step back, the uncertainty that we are facing now really pales in comparison to what we were facing just 5 years ago. During the pandemic, there was more uncertainty. The economy was shut down, and we didn't have a timeline for when things would open. And in the end, that created really good long-term buying opportunities. So the key really, we think, for investors is to focus on the long term.
You say 5 years is the period you should think about holding a stock?
As a minimum, yes.
As a minimum, so you are long-term investors. You have some ideas for us. Bombardier, you think, could be a decent bet right now. Why does that stock appeal to you?
That stock has had a really good track record over the last 5 years. They have a very strong backlog, which indicates strong demand, which incidentally has not changed even with the talk of tariffs. This is a story of margin expansion. They've done very well managing their operations, and they have done really well at paying down their debt and improving their balance sheet. In the long term, the more jets there's an opportunity for them to grow their aftermarket service business. And that is, again, going to raise their margins. And in terms of tariffs, the aviation supply chain, like the auto supply chain, is deeply integrated, and it really is not a matter of moving production from one place to another so easily in the short term. Many critical parts for engines, and as well as the aluminum and lithium-based alloys that are used in manufacturing jets, are produced here in Canada.
Right, which could make them less vulnerable to import tariffs on aluminum, you mean?
Well, in the near term, the tariffs would just act as basically an increase or a tax on the final product. It is not so easy to move production from one place to another.
Dollarama, it's done so well compared with its US equivalents, Dollar General in particular. You see more upside for Dollarama.
Yes, Dollarama is a name that we really like. It is a best-in-class retailer. In times like these when the consumer is stretched, it is clearly a beneficiary. It is a staple retailer for many Canadians. 70% of Canadians visit the store once a month, and 29% actually visit once a week. So they are a key retailer that offers very good value. And this is a company that has high operating margins, north of 25%, which is really impressive for a retailer. And it has grown its earnings over 20% per year over the last 3 years. Longer term, we're very excited in that there is continued room for expansion in Canada, but outside of Canada, they have Dollar City in Latin American countries, and they recently announced an acquisition in Australia of TRS, which is a discount retailer, so they can take their expertise to Australia as well.
Let's squeeze in one more name, Jabil, the contract manufacturer. We talk a lot about Celestica. We kind of forget about this one, but you see upside here?
Yes, Jabil is a worldwide manufacturing services company. They also have a solid long-term track record, growing earnings over 23% over the past 5 years. And they're well diversified and continue to move into higher margin industries. The long-term growth for Jabil really comes from the build out of data centers, and they are benefiting from AI. There is the need for semiconductors and cloud data infrastructure, which has been very strong for their businesses.
Erica, thanks very much indeed.
Thank you, Andrew.